guys, and welcome back to another episode of Travis's Musings. I want to take a moment up front and apologize for the long hiatus between videos. I think it's been 8 weeks since I've done my last video, and I know that you guys have all been clamoring for more. You guys have missed my face. And so I was thinking that today would be a really good day with my move to the F Fund to sit down and take a look at the events as they're unfolding currently. In the market with seasonal strategies, with the beer bet. We got a lot of stuff to cover today. Up front, I also wanted to make a note that Matt recently acquired the rights to TSPcalc. It's a fantastic forum with a wealth of knowledge. It's where all the admins originally met. It's where Matt originally launched his TSPcalc idea. And it's where you can get a lot of the historical reference points, especially with Atreus's seasonal musings that he posts over there. So if you have not, head on over to TSP Center and take a look and make a free username on the forum and begin perusing. There's a ton of info. On that same thread, I want to remind everybody, especially any of the new viewers or new members, that we are not financial advisors. Neither myself nor Matt nor any of the admins over at TSP, at the Seasonal Strategies Facebook page. We are not financial advisors, we're not fiduciaries, we're just hobbyists, as Brian lovingly calls us, as it applies to our own TSP and the stock market on the whole. And I would really encourage everybody to make sure that you guys are taking a look at the announcement section, go into the Start Here post, and beginning reading all of the material, watch the videos, and try to get a grasp, not necessarily on when you move, but why you're moving. And all of those things together will help you make a better informed decision for your own retirement. And it's important to learn these things so you can find your own risk tolerance, which I think is something that everybody needs to find for themselves, and then figure out how you want to apply that risk tolerance to your own retirement. So that being said, today we are going to dive in over the last 8 weeks, back to May 20th. And we're going to take a look and see how Travis did, see how the market did on the whole. Take a look at August. We're going to take a look at the beer bets where Deena has gone from first to worst. I'm sorry, Deena, you should have stuck with Team Travis. And then finally, we're going to take a look at the S&P 500 chart. Just briefly, we're not going to be doing any technical analysis, but we are going to take a look at the wild ride we've had since that fateful night on March 23rd when we hit rock bottom. So anyways, let's head on over to the computer and we'll start taking a look. Okay guys, and here you can see we're over at the TSPcalc website, and I've went ahead and input my own strategy and then benchmarked the C fund and the S fund against it. Came down here to the graph section and input the date range of 520 up all the way up to close of business yesterday, July 16th. And now it looks like the C fund closed about 0.35% less than the S fund, so you can go ahead and add some delineation there between Travis and the S fund by another 1/3% there. So you can see over that time period that the seasonal strategies kind of put me right in the middle with 12% over that time range, where the S fund returned 15 and the C fund returned 10. So what's kind of interesting about this is we've had multiple people asking, hey, is seasonality, has it returned? And the answer appears to most of us that yes, it has returned. There are other indicators that are also or market movers that are pushing the market. We got the Fed and we've got the stimulus packages, and of course those kind of things are going to be there. But it appears you take a look at this entire time frame, which is approximately 8 weeks, and I was out of the market for 4 of those. And despite that, being out of the market for 50% of the time, I returned right in the middle of the C and the S fund, which is pretty good. That's not a bad little run, and it kind of gives me the confidence that I need to go ahead and do or exercise my move that I did this morning, which is 100% of my TSP over to the F fund for about the next 6 weeks. And I'm okay with that on a couple different reasons. Historically, which we're going to see in a second, August is just not a great month for equities. In addition to that, I do have a lot of vacation planned in August, and this kind of allows me to not worry about my 401k and just kind of sit back and hopefully watch the market burn, much to Anthony's chagrin. So that being said, kind of a neat little function here on the TSPcalc website is utilizing this graph feature to kind of see how your moves would be playing out against the the equities markets funds individually. So the next thing we're going to do is we're going to touch base on the beer bet. And you can see here for 2020, myself, I am right there with Deena in fifth. I'm in fourth place and Deena's in fifth. Notice, Deena, again, that you are in last place down here with minus 7.01% on your strategy. And that is what you get when you deviate from Team Travis. So, no, I'm just kidding. Deena and I have some pretty big deviations, I believe, in the next couple of weeks, including Larry. So there should be some continued separation. And don't let Matt crow too large here, but he is almost even on the year. And I think we talked about this back in January. I said don't sleep on Matt's strategy anyways, because it's a quote-unquote boring strategy. It's basically following all equities, but it tries to pick the best time to be in each of those equities market, and it has beaten buy and hold long-term over the course of the TSPcalc study set. So again, don't sleep on Matt's strategy. I think it's a pretty good strategy, and it's something that, I mean, one day in the future, if I get tired of all this moving back and forth and stuff like that, I'll probably go into an all equity seasonal strategy like Matt. So again, notice he is at negative 0.3 right now, which is pretty fantastic, and he is winning the beer bet. Let's kind of talk a little bit more about what I did today. So today, I went ahead and exercised my strategy move a day early. And a lot of people may say, why did you do that? Aren't we supposed to stick to our strategies? And the answer is yeah. I mean, you are supposed to. I mean, these strategies were built to stick to them. If you're hopping around all the time, then a lot of times that you generally will get worse returns than if you stuck in the market, especially if you're just throwing darts at the board. A couple of weeks ago, though, Anthony and I noticed that the seasonal moves seem to have been about a day off over the last couple of months. And so I went back and I changed May and June around and went ahead and benchmarked Travis, which is 85,425, and Travis -1, which is what I'm calling this other strategy, 116676. Now, granted, I've not continued to change out the 1 days. I only changed it for 2 months. But over the last 2 months, that extra day has accounted for basically 5%. And so I went ahead and took a calculated risk and moved my funds a day early and not letting it sit over the weekend. So we'll see on Monday how that turns out, and you guys can roast me or not. And that being said, I do want to touch base. On my last video, we did talk about what I found kind of interesting on how the 2009 recovery was tracking the current recovery. And my prediction, bold prediction, did not come true. You won't see a lot of people come on and talk about how their bold prediction did not. But we'll kind of take a look at the S&P chart at the end and take a look at what it did and what I had expected it to do and whatnot. So that being said, let's go ahead and take a look at, let's back up. Let's go back to the beer bet. And let's scroll down and take a look at where we deviate in July and August. So you can see here, we're on the 12th trading day of the month. So on Monday, I guess today Larry was supposed to go to the iFund, and that's and 57,171, Jaron's old stalwart, also went to the iFund this morning. I got my IFT alert, so hopefully the IFT issue has also been rectified. Jaron and myself go to the F Fund on Monday, or our strategies do. And Deena is actually going to be in the C Fund all the way up until August 6th, which is pretty interesting. While the rest of us are going to be hanging out of the market, of course, Matt's always in the market here, until the last third of August. So let's go ahead and take a look historically how that matches up between everybody. So for August, Travis averages 2.32. And let's go ahead and take a look at Deena's, because hers is the biggest difference. Hers average is 1.06. But I will say that I actually don't mind her strategy right now is having the extra equities exposure. The market has been unruly at best and has been bucking a lot of trends. And so it's really not necessarily a bad play. You just have to go ahead and, like I talked about earlier, is kind of find your own risk tolerance and try to evaluate where you want to be. and what kind of a strategy you would like to follow. So we have a couple different videos that you can go back and take a look on how to choose a strategy and utilizing the search features and whatnot. And I would encourage you guys to go ahead and take a look at those and kind of figure out where your own risk tolerance lies. So let's bounce over here to August. So try to ignore all the rest of the stuff here. We're going to be focusing just on August. So being out of August for 3/4 of the month has returned an average for my strategy, 85-4-25, of 2.32%. Now, go ahead and take a look at the C fund. August all-time average it's in the negative. In fact, this is one of the only negative. June and August are the worst months historically for equities. And you saw kind of how June went, pretty flat, and we actually ended up doing pretty good through that time period. And August is actually, I know it's a small number, but it is technically twice as worse. And for the S fund, it is even worse than the C fund, typically in August. So, while inversely, the F fund has its best month of the whole year historically in August, of returning almost a 1% average. So again, take that for what it's worth. There's only been 3 negative Augusts for the F fund in the last 16 years or so. And so that's kind of where we're at and why most strategies have you out of the market in August. So take that for what it's worth and apply that to your own knowledge platform and make the best decision you can going forward. So, okay, guys, and here you can see we're over back on Thinkorswim, which is a product by TD Ameritrade. And no, I'm not sponsored, but I do think it's a pretty fantastic free program that you can utilize for stock evaluation. And we have the SPY, or the Spider, which is basically it's a fund that tracks the S&P 500, which is why the numbers look a little bit different, but it's of course by a factor of 10. So here we've got the recovery, and I'll go out on a limb here and admit that I was wrong in my assertion of what was going to happen through June and with the market. And this is really where I thought it was going to happen. You can see here, if you remember, we were talking about it on that earlier on the graph when I was in the G fund, that the market took a big dip. And this is when I thought that the market was going to continue down, maybe towards the 50% level, right around 2,800. And of course, there was an off chance that I thought it might even drop all the way down to 2642. But I was a little bit surprised it bounced here pretty as well as it did. And you can see that we've actually been pretty stagnant for the most part. It hit a high here. Looks like it wicked up on the candle to around 32.34, and that's kind of where we've been living. We hit 32.34 here, and it hasn't really wanted to bust above that level. And so we'll see if it's going to be able to do that through the next 4 to 6 weeks or so as we're out of the market. But you guys may be wondering what these numbers are here. These are the Fibonacci numbers. It basically is a percentage of the high down to the low, and these are apparently significant numbers according to some math people. Fibonacci numbers appear all over in nature, and they're kind of neat. So, but it's kind of cool to watch how the market actually reacts to these limit points. You can see they test them as support and resistance all the time. And so you can see we've tested as resistance, and then all of a sudden we tested this as support before we moved on. You can watch it bounce basically right off the 61.8% retracement level, come back up here to 78.6, testing it as resistance. And now it appears that it may be testing the 78.6% as support. And so we'll kind of see going forward if the market is going to be able to elevate and get back up to its 100% retracement level, which is that's the next big number, which is basically 3,400, 3,393. And so pay attention over the next couple of weeks and next couple of months, and we're going to kind of continue to watch and see how the market continues to recover on this. So. Again, like I said, I didn't want to get too far into the technical chart analysis of this, because I'm not an expert at it, but I do find charts pretty interesting. So that wraps up the video for today. And I just want to remind everybody to make sure that you subscribe down below to the TSPcalc YouTube channel. Make sure you click the bell so you get notifications every time myself or Matt posts a new video. And head on over to the TSP Seasonal Strategies Facebook page. And don't forget to register on TSPcalc.com. Memberships are only $19.99 for a year. And the amount of information that you get from that membership is phenomenal. I mean, the database that Matt has collected, you're paying pennies for the data that you're getting. And not only that, but the community is fantastic. I mean, everybody's really supportive of one another, and we try not to be exclusive of people. And I've really enjoyed, I've made some lifelong friends during this whole venture. So anyways, we will talk to you guys hopefully in a couple of weeks. I probably will not be making another video this month, and I'm hoping to make one again about mid-August when I get done with all of my vacation. So anyways, thanks a lot, guys, for tuning in, and good luck on your decision on Monday or possibly today.